A very good afternoon, everybody. This is a panel on impact tokens and responsible innovation, and I'm your moderator, Boon, from the security services arm of Deutsche Bank. We count asset managers and asset owners among our clients who are very focused on ESG. So briefly, what is this panel about? This panel's topic is linked to the larger topic, actually two very large topics, very interesting topic. First one is on ESG and sustainability. What does sustainability include? It includes, of course, climate, environment, but at the same time as well, circular economy, households like concerns on household debt, individuals like income inequality, and sustainability of SME finances, which employs between 60 to 80% of workforce in APAC economies that many of us belongs to. This panel is also, the panel topic is also linked to technology that is viewed by regulators, public sector, as well as civic bodies around the world as a very important enabler of sustainability. So for example, OECD has published a report on DLT as a digital enabler for sustainability. And yesterday in a speech by Mr. Ravi Menon, Managing Director of MAS, he has also introduced the term green FinTech, or the role of FinTech to enable trusted and efficient sustainable financial flows. So this panel will explore the potentials and the new value creation in the intersection between these two really exciting movements. Sustainability on the environment front and on the SME businesses with DLT and its characteristics of transparency, immutability, precision, and superior information distribution capabilities. To discuss these important topics, ladies and gentlemen, without further ado, please let me have the pleasure and honor to introduce to you our expert panelists. Mr. Andrew Wong, Director of Strategy and Chief of Staff, Asia Pacific, UBS Bank, based in Hong Kong. Dr. Kalpana Seethepalli, Director of ESG, Asia Pacific, Deutsche Bank, based in Singapore. Ms. Catherine Casas, First Vice President, FinTech Business Group, Union Bank of the Philippines, based in Manila. And Ms. Swesa Aryapucha, Deputy Director of Regulatory Coordination and Sustainable Banking Division, Bank of Thailand, based in Bangkok. Each of the panelists will share their views before we open the dialogue and Q&A. So for the audience, please send your questions or your comments via the chat function, which you can actually check the anonymous function if you like, anytime while we speak. So at this point in time, please let me turn over to Andrew. Andrew, all yours.
Thanks, Boon. And thanks everyone for joining the panel today. So just to reiterate just very quickly, so I'm Andrew from UBS, kind of our regional strategy team. And our team focuses on, amongst other things, digital assets and DLT enabled innovations, as well as focusing on ESG and sustainability for our 13 markets across our 3 business divisions in wealth management, the investment bank, and in asset management. I think what's exciting about this panel today is the possibility to talk about the convergence of these two topics coming closer and closer together, both DLT and DLT-enabled innovations with digital assets and digital cash, paired with the ESG kind of topic, and how this is an area where there's a lot of potential synergies for these two topics to come together. The way that we think about it is that a lot of the green financing instruments that are out there across the spectrum represent a new securities format that is coming to market, that we probably the first one in a while. And it really is a combination of 3 different pieces. It's a traditional financial instrument that's about securities and cash, plus data, ESG and sustainable investing, very much focused around kind of attaching more data, bringing more data to the securities instrument itself, and transparency. So with the traditional instrument point, DLT enables a lot of possibility around bending the cost curve, mutualizing workflows, synchronizing the underlying infrastructure. This template for capital markets infrastructure transformation helps us to lower the cost and think about kind of new possibilities if the cost to issuing products to distribution is lower. So that in itself is already powerful. But I think when we pair that with some of the non-financial aspects as it relates to ESG data and the use, again, potentially of DLT or non-DLT technologies to capture, collect, organize, and digitize this information, this brings a powerful second lever. And I'm sure in the course of the panel, we'll share some of these and dig into some of the possibilities here, but it's transforming traditional instruments into ESG-linked instruments by bringing in this data component. And so I think this is very exciting, and this represents a good opportunity to leverage the technology not for a pure financial use, but in a non-financial sense as well, as we bring this new data into the ecosystem. And lastly, the transparency point, that really ties back to the increasing expectation from investors and from regulators, from the ecosystem, around being able to trace some of this data, being able to trace the financial flows. And both of these, through technologies like DLT, we think are uniquely enabled. And so just to sum it up, we think that there's a lot of opportunity with green FinTech, by bringing together this combination of a new technology on the securities and payment side, by tying it to data, and also ensuring that transparency is there and is traceable amongst kind of a wider set of ecosystem participants.
Thank you very much, Andrew. Thank you. I think the paradigm that you paint, a new paradigm of, and I'm reading from my notes, right, that, there's three different components in this ESG financing, the traditional component, together the data and transparency. I think, it actually puts a really interesting angle to this ESG space. Then, I would actually like to talk more about what is an impact token and what does it mean for all the panelists. But before we do so, right, please let us go to Dr. Kalpana for her views of this topic and on this intersection. Thank you.
Thank you very much, Poon. Thank you, Andrew, all the panelists and the audience. I'm Kalpana Seethepalli, Director of ESG for APAC at Deutsche Bank, with over 20 years of investing experience in SDG and sustainable development projects with the World Bank and with private equity platforms. So there are lots of conversations these days around ESG, and it's great to be part of a discussion like ours today, where we talk about how ESG can interface with the more sort of new tech-enabled financing solutions. So I'll talk a little bit about ESG and then about how DLT interfaces with it. Let me begin by sharing three big trends that are shaping the ESG market today. First, measuring results is becoming increasingly central to ESG investments. The market is moving to an active investing mode on ESG, and investors and lenders are seeking to allocate capital to achieve positive impact, and are moving beyond the negative screening lists of the past, where you simply wouldn't invest in weapons or gambling and things like that. So how do you know you're having positive impact? You know because you are measuring results on the ground. The market is today rejecting the greenwashing that's been happening for many years now, where a lot of capital was raised in the name of sustainability, and investors were just left wondering what results were achieved for all the money that was invested. So that's the first trend in terms of moving towards results becoming more and more important. Second, the COVID pandemic has squarely highlighted the S in the ESG. And this is both in terms of the vulnerabilities of the lower income demographic affected by COVID, as well as in terms of the financial instruments that are available to address them through social bonds, for instance. The pandemic has also broadened our understanding of the social constituency to include customers and workers and the environment and the community more broadly. And it's all about, it's this trend towards sort of highlighting the S in the ESG is essentially making all of us market participants, whether it's investors, lenders, companies, work to make businesses stand on a more socially sustainable footing. That's the second point. Third is that ESG investing has a key role to play in transition finance. So we are in the midst of a huge transition to a low carbon economy, and how we help companies and clients execute this transition in the future will be very important. So when you talk to a coal company or an oil company, again, we need a robust results measurement framework or a metric that helps track their transitioning towards sort of out of their current industry and towards a more low carbon alternative. And of course, we need to couple the results metrics with financial governance and audits and similar tools to then midwife and facilitate this transition to a low carbon economy. So the one common thread across these three market trends that I just shared was the emphasis on results. Now on the ESG stage enters DLT and new age technology and blockchain. And that is a potent combination because tokenization can be extremely valuable to measuring results. So impact tokens can be used to measure, track, monitor, report, and verify the results coming out of ESG transactions. ESG impact tokens essentially represent a specific impact, which is in the form of a measurement metric. So for example, tons of carbon dioxide removed from the environment, or numbers of low-income population that's connected to internet broadband, for example. These tokens can be registered on a blockchain. They can be tracked along the entire supply chain. They offer digital proof of a positive impact being achieved. And importantly, they associate that impact with a specific investment. So by providing immutable digital proof of a positive impact coming out of an investment, DLT essentially helps connect sustainability of a company with its financial performance. And that is at the core of the ESG market. And tokens then become a valuable digital asset to hold in the future. Once you have that, DLT can be used. It has very powerful ESG financing applications. First, it can be a tool for financial inclusion and to monitor the attainment of various SDGs. Second, it can be a means for issuance of ESG instruments, for example, for your use of proceeds bonds, for instance, where you have to use the track the proceeds that are being utilized for various purposes, or for your KPI and sustainability linked instruments where the reporting of a results metric is critical. So all this sounds utopian, but this reality is quite close to where we are at the moment. Just as a parting thought, two key areas to think about as we make this scenario into a reality. First is thinking through whether impact tokens can be rolled out as security tokens or utility tokens, because they have different purposes or values for different audiences or different investor types, for instance. And second, cybersecurity issues. You have to really be careful about those issues to uphold the integrity and to ensure the integrity essentially of the ESG blockchain. Thank you. I'll stop here now. Thanks.
Thank you very much. Thank you very much, Dr. Kalpana. You have introduced a lot of topics, so but I think there is a very clear emphasis on results. Before we turn over to Kathy on the aspects of sustainability for SMEs, I would like to actually ask Andrew. Andrew, what's your view then on the applicability of DLT and sustainability? So, for example, in carbon, and in this discussion on impact tokens and utility tokens, do you have a view that you'd like to share?
Yeah, sure. I think that's definitely an interesting thought to split it along those ways. In those two dimensions, the way that I would think about it is there's the security token portion, I think, is relatively straightforward or easy for folks to grasp in the sense that these would be green financing instruments, like the use of proceeds bonds, sustainability linked bonds. These are configurations of securities that could be programmed in a smart contract format on a blockchain. Private shares raised for companies that may have intention to generate this type of impact as well, all could be captured in a relatively recognizable framework for probably a lot of issuers and investors. The utility token side is an interesting one. I think that's where it's hard to maybe put a finger on what that could be defined as. The way that I would think about it is all non-financial data today that could be so-called tokenized and registered on a blockchain, things like the amount of carbon generated, or carbon offsetted. The amount of reduction in energy consumption, these are all data in a sense. It's not financial data strictly speaking, but to the extent that the ecosystem, regulators, investors begin to price that, then I think it becomes a financial asset. So in that sense, would we think of utility tokens really as, in an ESG context, as this data that maybe didn't have a financial value explicitly before, but now can be assigned one through various means of top-down or bottom-up from the investors, top-down from regulators? That creates an entire, almost unlimited set of possibilities around what could be priced and traded and used to track and create incentives for different folks in the ecosystem. So that's probably the way I'd split between those two as a first pass of how I think about security versus utility token in this type of context.
Thank you very much. And in fact, right, as we're talking about the utility token and how it could be priced, it seems like, almost in this case, a non-traditional asset could actually become a new financial asset in this space as a result. So, as a new value creation, right? And, we read from the news during this Singapore FinTech Festival as well, that there are movements right now to say, hey, how can regulators working together with the private sector reinvigorate the carbon trading sector in order to promote, right, lower carbon as well as, related instruments. Really exciting. So I encourage the audience, please, any questions, any comments, please send them through the chat room. In the meantime, we'll right now turn over to Kathy for her perspective of, DLT and sustainability in the realm of SME finances. Thank you very much, Kathy.
Yeah, good afternoon, everyone. Thanks for that, Boon. I am very happy to represent Union Bank of the Philippines in this panel. So for everyone's information, Union Bank is a universal bank in the Philippines that promises to power the future of banking by co-creating innovations for our customers and for a better world. So that topic resonates a lot to me and to us. So as a quick introduction, I'm from the Blockchain Center of Excellence of the bank. Prior to my joining the blockchain group, I spent more than 10 years as a fixed income trader in the bank's treasury group. So everything really comes together for me. Blockchain was part of our digital transformation journey, the focus of which wasn't all tech, but mostly people and culture. And we've embraced it as early as we believe in the role it will play in the future of banking. So having said that, our main role is really for capability building, mostly through experimentation and practical applications. We lead efforts for blockchain applications, and because blockchain is a network, and I guess this one, well, I guess it's important for us as we talk about impact tokens and sustainability that success depends on collaboration. So we encourage collaboration across not only internally across the different units of the bank, but also, of course, outside. So we've partnered with different institutions to co-create blockchain solutions together. The latest of which are in the asset tokenization area. And now, and especially accelerated by COVID, and as we feel start to feel the ill effect of climate change, as people start to, rethink their purpose in life and the role they play in society. A perfect use case for asset tokenization is now being seriously explored in the DLT industry, and with merit, of course, and that is the case for impact tokens, which Kalpana and Boon explained also earlier. So just to put the context of ESG here. So it has actually changed dramatically over the last several years. Whereas the concept itself has existed for decades, I believe the focus on the topic has never been as great as it is now. So yes, there have been companies focusing on green initiatives, such as renewable energy, for example, but these were by no means the mainstream then. So at the same time, many investors didn't put that much stock into those factors. They were considered nice to haves, things that were expendable, unless it was somehow key to their positioning that leads to profitability. Now we've observed that things are much different. So now we see an emphasis in sustainability across many successful companies. And this is driven by us, of course, the consumers. So we are a lot more conscientious across than in the past. The young ones, consider themselves woke or socially and environmentally conscious about the things that affect the globe, given that they have easy access to information. So they now know which brands have unfair business practices due to controversy spreading on social media. They want to know who they are patronizing and are willing to put more money in places which they feel better aligned with their personal beliefs. So I guess transparency is very important, and traceability is very important here for businesses. Now with the pandemic, the conscientious behavior extended across all generations as people like us start to rethink our purpose and how we can contribute more to society and to the planet. In response to this, more firms have also launched funds focused on ESG, not only because demand has risen for socially responsible investing, but also because the belief is shifting from sustainability is a nice to have to it being critical for long-term profits. This makes absolute sense economically speaking, and more studies even show that ESG focused funds are also outperforming non ESG funds, especially during the pandemic. And what is even more evident this year, with everything that has happened in 2020 for us, is the drive is becoming more personal. You see, business owners themselves have personally started to, as mentioned earlier, rethink their own purpose in life and consequently rethink the purpose of their business for the customers. So capital markets have a big role to play in supporting these initiatives and to help bridge the funding gap. We want to envision how the capital markets can adapt to a world where investors continuously demand that level of transparency and ESG programs from companies. And among these firms, we want to consider the increasing role of the smaller ones. So the MSMEs and the role that they play in the path towards achieving sustainable goals. So we've spoken earlier in the week about financial inclusion with regards to retail investors. Usually the focus is for retail and individuals. However, financial inclusion, because financial inclusion has been identified to play a big role in sustainability, as it is said to be a stepping stone towards attaining sustainable development goals. And at least six of the 17 SDGs, I think financial inclusion is mentioned, sometimes explicitly as a metric used to determine the success of the SDG. So you have eradicating poverty, zero hunger, good health, and the others. So we feel that addressing financial inclusion can lead to cross-cutting effects, essentially hitting multiple birds with one stone. So MSMEs, because of its position in the community, it plays especially in the Philippines, it plays a major role in poverty reduction and employment generation. Therefore, experts consider this sector as a strong engine of economic growth. But the challenge is that most of them are also excluded financially. So given the startup small nature of their business, and if addressed and targeted, could be a driver of retail financial inclusion as well. To be more specific, most MSMEs face various challenges, one of which is funding. All the more after this pandemic, they lack quick access to financial support to scale up their business and lack the same access to funds as the bigger firms. Some of these young founders, based on our experience, have also built startups or private companies on the concept of being ESG compliant and sustainable. However, the question is, would they be able to raise funds from the public at much lower costs? Is a proper platform all they lack to make this impact? So Union Bank has actually made strides in using technology to add value to our clients in that space. Our APIs, for example, have given fintechs and companies the ability to integrate new capabilities into their offering. We also have an online platform called The Portal, which is widely praised by our business clients for making it simple for them to execute their banking needs on screen. We have also the Global Linker, which has allowed local companies to join a network of over 300,000 MSMEs. And through our subsidiary UBX, we have Centro, an online shop builder with payment options integrated, such as Box, another UBX initiative to help better service our SME client needs. We also have CCAP, an online lending platform that allows potential borrowers to select from various loan providers for financing. And then we have I2I, which stands for Island to Island, institution to institution, individual to individual, which is a retail payment solution that connects more than 100 rural community banks across more than 7,000 islands in the Philippines with each other, and connecting them into the mainstream financial network using blockchain technology at its core. So essentially what happens here, it allows us to provide banking solutions to the unbanked and underserved communities through these small rural banks. So as much as we have built so far, we continue to pursue ideas which can help better connect the world for our countrymen. Making it easier for firms to ramp up their progress is a major driver for us. We want to be part of the discussion as more companies push for sustainable business models. We want to not only bank them on a basic level, but also explore the synergies that could exist. So can we connect them to the right sources of capital, right customers? Now with the technology opportunity that now exists in the world of blockchain. Asset tokenization allowing for fractionalization and potentially resulting to lower borrowing costs for these businesses, plus the advent of the Internet of Things, makes it so much exciting for a potential future state of banking that blends all of these trends together. I guess just to end this, as members of the society, because we're talking about ESG, environmental and social development, sans citizenship, sans type of work, whether as individuals or as a business, we all have an important role to help ensure responsible innovation. So key to this are transparency, accountability, and innovation. As they say, transparency leads to accountability, and accountability drives innovation, which therefore and innovation is key to resilience. So the problem is that it sometimes requires us to collaborate, either among our peers, public and private, among regulators and regulated entities, fintechs and banks, or maybe even bigger institutions are even required to play a big brother to the community of smaller businesses. So there is leverage in working together. And this pandemic is an opportunity for all of us, companies, investors, government, civil society, to think critically about what our role might be and how we might collaborate in creating a more resilient future. So this has to be intentional, and we all have to be proactive. So we have to start crafting that future instead of just letting it happen by default, because the default could be to not have a future at all. So yeah.
Oh, thank you very much, Kathy. Those are really powerful messages. We have to think about future, otherwise we won't have a future at all. that really resonates. Thank you. You really paint a whole ecosystem effort in ensuring sustainability, right? At every level, from business to people, and then property elevation, as well as employment. And I think you have touched on a couple of things, like how can this small MSME raise funds and capital, right, in order to continue on their business. Let's say I'm invested in Singapore, and given that Philippines is a really growing economy, I'd like to invest in this MSMEs, right? What would be the way that investors from cross-border could actually participate in this sustainability drive by the Union Bank of the Philippines?
Yeah, right now there is no direct way for that to happen. That's why it's really important that we touch on all of these things so that we build that platform for the MSME, so that it becomes not a national agenda, but becomes more a global one.
Great. Thank you very much. Thank you. Actually, I've seen in the ASEAN capital markets forum regulators a roadmap to sustainable capital markets. One of the pillar and one of the topic talks about ensuring, looking into crowdfunding across border in ASEAN, and see if such an infrastructure could actually be implemented. So at this point, please let me segue to Swissa, for the regulatory and policy agenda, view and direction of this, really important and great topic. Swissa, if I can turn over to you. Thank you.
Okay, thank you very much, Boon. And thank you very much for having me on this panel and to be able to join in this conversation, the intersect between technology and sustainability. Just a little bit myself before I go in. I've been at the central bank for almost over 20 years. And I started out in the financial markets. And for the past 10 years, I've been working on the financial institution strategy side. So it's kind of fitting all in together. And it's good to see how, the evolvement of the financial markets and also the financial system going forward. So, as a policymaker, our perspective is usually, when we think of, how a policy, we should center around three key questions. First, what are the existing challenges or source of, economic vulnerabilities that need to be addressed? Secondly, what is the time frame that we have, to implement policies that, if they are needed? And thirdly, how can we achieve this? So, if you look at the current state, with the COVID pandemic and causing a lot of economic uncertainty going forward, you can see that the urgency with which we have to address these economic issues have really kind of, increased in urgency. For example, these issues such as climate change, financial inclusion, SME financing, governance issues. And if these are not addressed quickly, they will increase the economic vulnerabilities that we are really experiencing with this pandemic. So for, and to look at the urgency at, why we have to look at these sustainability issues. which is a focus on right now. And for example, if you look at climate change, and Asia, and not just Thailand, we are actually very vulnerable to rising sea levels. In Thailand, in some reports, we're estimated to be the 7th country most vulnerable to rising sea levels. And Bangkok is very low-lying, so we have a high possibility of being flooded in most of our, major business districts or economic areas. So that is a real risk, and we have to look after. And of course, these natural disasters, we have experienced flooding and droughts, and these have really caused a lot of economic losses to Thailand. And if you look at this, the agriculture sector is a big part of Thailand's economy, and over 1/3 of the population is in this sector, and they are being highly influenced. So this leads me to the social side, that we mentioned on sustainability. Like Kathy mentioned earlier that, Dr. Kalpana also mentioned about how the social side is really now very important. And, in Thailand, this is something that we're really seeing. For example, the SMEs in Thailand now account for roughly, over 40% of our GDP. And the global, pandemic has really raised concerns about how are they able to access funding. Previously, even before this, they already had trouble accessing finance, and they hire over, 16 million people in the Thai economy. And how do they access funding? And especially now with major economies globally transitioning to a low carbon economy, they need to be able to access funding even more in order to adapt their business models to be more sustainable, in order to make their supply chains more efficient. So this is a big challenge for SMEs, in Thailand as well. And of course, the governance issues is something that's that we see, that is very important. And if it's left unchecked, it will cause a lot of, social unrest, a lot of protests going on, and it will also, if we don't look at the governance issues, it will corrode the effectiveness of any policies that we come out. So going forward, how do we, go about doing this? As someone in the financial institution strategy division, we want to kind of design a financial system where we want to make the ecosystem conducive to a more sustainable economy. And one of the things we have to think about is how can we do things, the way we've been doing things in the past, or traditional ways, maybe taking a lot of time. So how can we speed it up and make it a bit more faster? So for example, and technology is something which is really, we talked about technology for the past few years, and now it's seeing the intersect with sustainability, and that is very exciting. And even, ASEAN and Thailand, we are talking a lot about these issues and how can we use technology to increase both the efficiency, the transparency, and also utilize it, in order to move our region going forward and the economy going forward. Of course, as regulators, we have to also look at the, without compromising stability and security of the systems. And for example, I mentioned earlier that how can we use this? For example, coming back to Thailand and the agriculture sector, for example, we have over 1/3 of our population is in the agriculture sector, our labor, and they are aging. Most of the labor in our agriculture sector is an average of 60 years old. And we need to increase the productivity in this sector. And this is where we think that technology can come in to help. And, technology as Kalpana and mentioned before, and Kathy mentioned before, it has a lot to do with data, and Andrew as well, right? Data is something that's very important. So we want to use maybe agricultural technology, to have more data collection or precision farming, and how to best utilize resources, for the agriculture. Another example that we could utilize this going forward is maybe, with the value chains. But as I mentioned previously, as economies transition to a more, to lower emissions or net zero, in Thailand, we have manufacturing as a value chain. So we want to talk about how can we actually use this, technology such as BLT in order to make the whole supply chain sustainable. And this is where the traceability and the reliability of data really comes in as, important factors. for example, SMEs, who, as I mentioned earlier, need access to financing. They currently don't have access, and they don't have any collateral, so it's hard for the smaller SMEs. I'm not talking about the large ones with collateral, but the smaller SMEs who don't have collateral to access funding. So, for example, this is the idea. For example, if they, for example, could lower emissions or increase efficiency and use these tokens as a way to monetize or their reductions in emissions, or use it as collateral, then that way could maybe something that they could use to get some funding. So with the interest of time, let me end this by saying that, although, we are in a period of a lot of economic uncertainty going forward, and there is a lot of opportunity still for us in order to kind of come through and meet these challenges, and also to reform our economies going forward. And that is, by using technology as DLT to help us with data. This is both on the policy side, how can we make better decisions with the information that we have through this data, and on the public side with people, who are able to monetize or use this data in order to maybe have more financing, or order to use it for, the opportunities are endless, right? And also, of course, this is something that is not just the private sector can do it alone, or the public sector. So this, I think, is we have to be really a partnership between both the private and public sector. And if we use this, embrace these changes, embrace these technology, and I really believe we can use these to transform our economies, and for the longer term, have a more resilient and sustainable economy. Thank you.
Thank you, Susa. Thank you. Another really comprehensive view of this exciting topic, and from another angle as well. Before we move on to Q&A, we have received actually some really interesting and good questions, right? So I will be replying to everybody here for us to take notes. But a question is just with there's actually a couple, sorry, a lot of great ideas here, but from the public-private partnership basis, right? Where do you think we stand today in the region, and what could be some logical starting point for this sort of private sector, public sector type of collaboration in this space? What have you seen so far? Thank you.
Yeah, I think we are seeing a lot more of this, especially in the past year and a half in Thailand, especially, or I'm sure as well in other countries in ASEAN. We're seeing a lot of really kind of coming in together to work on sustainability issues. For example, in Thailand, we have this the Thailand Responsible Business Network. We have the Global Compact Network, where these are large companies coming in together, and together with the regulators, both Bank of Thailand, the Securities Exchange Commission, and the capital markets, in order to work on how can we actually work on sustainability issues and technology. And these are some of the topics that we are really discussing together.
Boon, can I quickly jump in?
Yes, please. Yes.
Moderator?
Let's open this now to a dialogue, and then I will start introducing the questions that we've been receiving from the audience. So we've got 6 questions now, and they are all multi-parts. I'll give you a heads up. Dr. Kalpana, please.
Okay, sure. Thanks so much, Boon. Thank you, Svisa. It was like everybody else's, yours was a lovely presentation. I did want to add to your response to Boon's question. And in terms of public-private partnerships in particular, one area in which PPPs can be very useful is on putting infrastructure on the blockchain. So for the attainment of, say, SDG 11, which is on sustainable cities and communities, this point that you said, you could have carefully crafted regulation by government, which sets out the rules under which, you could have digitization of infrastructure, and then you can have private sector infrastructure providers come in. And for example, even things like waste collection in a city's context, I mean, you can easily digitize that, use tokens as a basis of rolling the service out. And Asia in particular is uniquely situated to take the lead globally on digitizing infrastructure in particular. And infrastructure cuts across practically all SDGs. Asian governments in particular are very tech savvy. and which is why some of the smartest cities in the world are in Asia. We are home to some of the smartest cities, very tech connected and so on. The public here is used to using, technology in a very modern sort of sense, in an everyday sense. So, I mean, my limited point was that on your point on public-private partnerships, and, we have good regulation, and the private sector can provide services, and you can easily tokenize and digitize all of that. And that by itself then can help you move on the attainment of not just SDG 11, but many other SDGs for water and energy and so on and so forth. And of course, financial inclusion, which is very, very critical. I'll stop here because I can go on forever otherwise, and just stop here.
So I definitely agree with you, Dr. Kalpana. And that example, I think, which the Bank of Thailand, some of my colleagues are working on is, you may have heard the project in Sanon, but they're actually working together, to work on how we can use DLT to improve the Thailand's domestic financial market infrastructures. So we are doing this. It's gone through the proof of concept, and they're, now in the phase 3 of the project.
Well, thank you. It sounds like we've got a couple of ideas here that we can start a couple of startups as well in this space. So let me read out the first 2 or 3 questions for everybody. I'll read them all out and then give everybody a pause for thoughts, right? And then to see who would like to go first. First of all, right, there's a question that I'd like to pose this to everybody. How are your organizations, how do banks and financial institutions today participate in ESG? So I'm guessing, the question is, how are our respective organizations, right, actually participating in ESG? And what sort of results do we seek to achieve, right? So, that's the first question that we have received from the audience. And thank you very much, whoever has sent the question. The second question is, actually directed to Ms. Swesa, but I'd like to turn over to the panel as well. What are the potential concerns from a regulator's perspective, right, that you would have regarding the use of DLT in the ESG space? So, what will you be looking for or guarding against? What are the risks that you are, guarding against, and what would be some benefits that you'll be looking for, right? When you apply. When, let's say, somebody sends in a submission and say, I want to apply DLT in the ESG space. So thank you as well to the audience who have submitted the question. And by the way, for all these questions, I'm paraphrasing a bit. The third question that I'd like to share before I stop here, there are actually 3 others. It's like, are there any restrictions that deters big brother companies to collaborate with startups to achieve ESG goals? So, I'm reading verbatim, right? Are there any systems limitation or restriction that deters big brother companies to collaborate with startups to achieve ESG goals? I will interpret it according this way, right? Are there any programs, or are there any challenges that big companies, right, would face if they want to collaborate with startup? How do big companies actually collaborate with startup? Bearing in mind, right, the differences in resources, differences in what each company can do. In fact, we hear as well that startups could sometimes be overwhelmed by big companies' requirement just from a vendor management requirement and onboarding process, right? So these 3 questions that we can start first, right? The first question is that, what are banks doing in ESG? Second question, to Swesa, but to everybody as well. What are the potential concerns from a regulatory perspective when DLT meets ESG? What are some of the benefits, or what are some of the risks? And then finally, any restrictions or any programs that could actually facilitate big companies from collaborating with startups to achieve ESG goals? I'll take a pause here and to see who would like to go first and on which question. You can just unmute and then we will turn it over to you. Should we answer the? Okay, Kalpana, yes, please start first.
Sorry, I can just go for the first one for starters. So at Deutsche Bank, the way we are organized to integrate ESG and do ESG in our bank's operations is a little bit different from most banks on the street. And that is that in Deutsche, we don't have a separate ESG division. So we don't have our own division, which means we belong to all the divisions in the World Bank. Sorry, in Deutsche Bank. My apologies, I was with the World Bank recently. So, but we belong to all divisions, business divisions of Deutsche Bank, right? So that means that we are able to take a client problem and offer an ESG solution to that particular problem. So it could be on the corporate bank side, could be on the investment bank side, could be on wealth management, or whichever of the 4 divisions that we have. What we do is and a lot of our clients are coming to us for a couple of different reasons. One is they may have their own commitment to ESG, and they want to move ahead on that. They have their own sustainability plans. And the other, interestingly, is the market is pushing them to do ESG. So recently, one of our clients had a successful IPO. And during the IPO, the investor said, what are you doing about ESG? We want something about this. So then they came to us, and then we are working with them. So it's a combination of talking about ESG in our client dialogue, as well as responding to clients' problems when they come to us. And also, I'll just end by saying that we've recently, added to our ESG, we sort of established a new ESG team, if you like. It's not a department of its own, but it's a team, and with very specialized ESG experience. And so we bring a lot of operational experience on the ground, which is on sustainable development projects and so on. And we would like to combine that with our investment banking and corporate banking expertise to then, offer tailored solutions to our clients.
Thank you, Kalpana. Actually, could we ask this question to the rest of our panelists as well? What is your organization, what is the bank, doing in this space? Would Swisa like to go next?
Yes, I can jump. So, I can tell you, from the regulatory perspective, what we have been doing and what we kind of would like the financial sector to be doing. So, with regards to the central banks, many central banks, including MAS, and Bank of Thailand, and we have really been really active on this sustainability issues. And for the past 2 years, in the Bank of Thailand, we set up a specific unit, which I'm currently in charge of, looking at sustainability, sustainable banking policies. And what we do is we work together with other stakeholders, not only in Thailand. We work with other regulators around the world through the NGFS network, the Network for Greening the Financial System. And this is a network of over 70 central banks throughout the world, but we talk together about how we can implement policies that will help the financial system take into account sustainability issues and really integrate it into their business practices. Example like Kalpana mentioned just now, how can we have, financial institutions like Deutsche Bank, like other banks, worldwide, actually talk to their clients and embed sustainability practices into their everyday operations. So that's what we are working on. And part of my responsibility is to design policies that will incentivize, financial institutions in Thailand in order to have them embed in this. So we've been working on this for over 2 years, and we have seen a lot of changes in our financial system in Thailand. We have several banks now which have their own sustainability units, and they're actually hiring people with, sustainability engineers, sustainability science degrees in order to come and work on these issues and working on really, talking to the risk management side, talking to the front office, and having them understand the issues of sustainability.
No, thank you, Swisa. Thank you. Could I turn over to Kathy, followed by Andrew then on, what are your firms doing in this ESG space?
Okay, so for us, just last April, our central bank has actually signed what we call BSP Circular 1085, or the Sustainable Finance Framework, so which effectively mandates all Philippine banks and financial institutions to incorporate sustainability or the environmental, social, and governance principles into the bank's strategy and operation. So after the guidance came out, we just realized that, without us noticing though, and I guess it's a happy surprise that most of our existing products and programs are actually aligned already with these principles. So while the circular veers towards a more risk-centered approach to sustainability, it also allows the bank to leverage on our digital and innovation strengths to model a sustainability path that is driven by investments in people, technology, and digitalization. So for us, Tech Up Pilipinas is the anchor point of Union Bank's sustainability strategy. Like our approach to digital transformation, it's really our approach to sustainability is about people, mindset, and culture. So it's more than sustainability for us. It's more than just compliance to a mandate. We want to fully align our digital transformation strategy with sustainable value creation. So the end goal of which is, I guess, for us to fulfill our bank's purpose, which I've mentioned earlier, as co-creating innovations, innovative solutions for a better world. So we really want to take it to a direction that enhances a traditional notion of environmental preservation and protection. We want to model social sustainability that really leverages on our strength, and that is digital technology and innovation. So with this in mind, we pursue sustainable finance efforts that are based on cooperation and co-creation of these solutions for our society.
Thank you, Kathy. Andrew?
Yeah, so at UBS, we look at the sustainability topic as well as something embedded, I think, into every different business and kind of client-related interactions that we look at. Maybe unique for our footprint, it's really working with different stakeholder groups across the bank's different divisions to think about how to embed sustainability into the most kind of pressing needs for clients. Starting with, let's say, with our kind of wealth management as being one of the largest wealth managers here in the region. One aspect of this discussion is certainly about how to work with investors to incorporate sustainability and ESG integration into their portfolios. That is complemented with an asset management franchise that also focuses on institutional clients, so not just the private bank pools of capital, but also the institutional investors out there, how they're also thinking about incorporating ESG and ESG related factors into investments and portfolio asset allocation. That pairs, I guess, in both of those with products and solutions that need to capture where the market is going, as well as what investors increasingly are kind of need and demand in terms of aligning their portfolios with their values and the direction that they see kind of the market. Now that's complemented, I think, with a couple of other unique pieces that also allow us to look at this topic a little bit more holistically. On the investment bank side, we work with corporates as well in this context to think about, from the real economy perspective, how does their operations, how do they as they incorporate ESG and actually make real economy impact, what does that mean from a financing perspective? What does that mean from things that they may or may not need to do as this transition path, this journey towards kind of achieving some of these SDG goals is laid out. So on this path towards the future in that way. And lastly, through the Optimus Foundation at UBS, there's an interesting angle of bringing philanthropy and a different pocket of capital that maybe isn't working off the same constraints as investors and institutional allocators. I think in that sense, this offers a unique window into how to use philanthropy strategically in a way to catalyze some of these discussions around achieving certain SDGs that and deploying capital that and blending that into interesting opportunities as it relates to some of the bigger projects, maybe more difficult projects for traditional investors to think about. So across the board, it's really looking at different opportunities, engaging with different client groups to see how we can bring this all together under one umbrella to really deliver holistically. Thank you,
Andrew. Actually, if I could just take this opportunity to ask you as well, Andrew, on the question, if you were presenting, that's a question for Shrestha, right? What are the potential concerns regulators could have regarding DLT in this space and benefits and risks? If we could start from you before we go on to Shrestha, if let's say you're, from your perspective, what could be one or two of these benefits and risks in this space, right? And then, let's turn over then to Shresa and for the rest of the panel as well.
Yeah, I think the benefits with DLT, the first one and the one that's been repeated, I think, on this panel as well is just a different infrastructure that could potentially bend the cost curve. And so this efficiency that comes with lowering the cost of processing of transactions, through the life cycle of a transaction is pretty important, especially because that unlocks the ability to drive more volume, to be a bit more creative of including more and more I guess stakeholders into the ecosystem, whether it's those looking to raise financing or those looking to deploy funding. So I think first and foremost, it's the benefit of DLT, both on the market infrastructure side, as well as probably on the data piece as well, the ESG data. Using a DLT is just a way of taking a different approach to organizing the market infrastructure and who gets access and the creativity that could be built on top of it. So I think that's important because that almost is changing the foundation and then allowing kind of different questions maybe to be asked, different solutions to be proposed. On the risk side, there are probably, this is maybe not so much a risk, but more of like an open question that a lot of financial institutions and fintechs alike are facing around just the commercialization. It's any new technology is going to require adapting constructs that may not have been built for that technology forward, and I think that's why an ecosystem approach I think is important, as Kathy raised as well, and Dr. Kalpana has, in terms of we need to progressively build up this infrastructure and identify what are the risks that surface from it, where is it different from how things look today, and then have a reasonable discussion about where those risks may or may not exist in the new world, and how we adapt accordingly to address kind of new things that pop up. But I think as we push towards more commercialization, more real transactions, more less simulation, I think the bulk of the effort around DLT is going to be less on the technology and more on the legal and regulatory understanding of how these technologies can be used, and there are some jurisdictions that are pushing to provide that clarity, and I think this is probably where we'll see some of these early experiments really come to fruition.
Thank you, Andrew. Shresa?
Yeah, so definitely agree with Andrew. And on I'm not in a fintech department, but overall, as a policy side, what we usually look at is, we want to make sure that the system is interoperable. So, we want to make sure, like Andrew mentioned, the whole ecosystem. So we have to look at the whole ecosystem of the financial system on, what are existing platforms, what are existing infrastructure that we have, and how do they fit in. So that is really one of the major things that we look at. And of course, and we have to look at the matter of innovation and how does this really serve, maybe the segments that are currently unserved. So how can we use this, in order to actually further our policy mandates that we have to really help, more financial inclusion, help SMEs, or, that aspect. So those are really key things. And of course, we have to look at the data issue of, we have all this, privacy concerns, security concerns. How do we make sure that it's, it doesn't really affect the integrity or the functioning of the whole financial system? So we have to make sure that, this fits in, seamlessly, and that it doesn't cause any major issues that could disrupt services. And of course, we also have to look at the data, the data of that's being used as well. How do we have, who has access to the data, the governance of these issues. So really, it's the infrastructure, the interoperability of the infrastructure, the inclusiveness of the infrastructure. Who does it target? Who has access to the information? And also how can we have this immunity to make sure that there isn't any kind of unwanted stability issues caused by the system.
Got it. Thank you. Actually, if it's okay, right, let me just turn to the next question and then pose this to Kathy and Kalpana, which is the question on, what sort of restrictions do you see, right, with big companies, I guess global companies or regional companies collaborating and start up to achieve ESG goals? What sort of restrictions, what sort of challenges do you see? And then what could be potential ways to navigate such challenges? Could we start perhaps with Kathy? Yes.
Yeah, okay. So in terms of, so I can speak only for banking. So it will be very specific for banking as a big brother. So for us, the major impediment that I'm seeing at the start of establishing a relationship with that little brother is really very basic, and it all boils down to KYC, getting them to get the licenses needed for them to be accredited, for example, as a partner of the bank. Access to financial services is very powerful. It's a double-edged sword, so you can use it in different ways. So the question is, how do we establish trust? I guess enough to give them the power to use our services and be our little brother in a way. And sometimes our traditional way of establishing this trust may not capture the actual picture and trustworthiness of the client. So all the more, I guess, that DLT becomes even more important, as I know that it has the potential to bring trust to the ecosystem, and hopefully it resolves all of these things.
Thank you, Kathy. Kalpana?
Sure. Yeah, thanks, Boon. I'll address this question at two levels, from the policy level and the transaction or deal level. On the policy side, this is outside of banking in particular, but just from a financial policy point of view, one concern that regulators might have is on antitrust. So you're decreasing the amount of competition in the market. You could have cannibalizing, the larger guys coming in, larger companies eating up the smaller companies, so on. So those are very major and very persistent issues in the market. And we have some very famous case studies around this, over the years between the US, UK, and Europe as well. So yeah, so the policy that is a very clear concern that they would rightfully so have. On the ESG transaction level, the question becomes, how do you, where does the accountability for the result lie? So if it is a big brother, collaborating with a small brother, again, it all comes down to defining the impact and how you will measure it. So obviously, for some positive outcome to materialize from the partnership, there will have to be something that will be the responsibility of the big brother, and another part of the deal, which will be the responsibility of the smaller company. So how to parse those two and make the accountability clear and the corresponding finances and economics of the deal clear, it can be done, but that is a concern that I, if I were to look at the collaboration between big and small firms and companies, I would have concerns on these two levels.
Thank you very much, Kalpana. We're at 6 minutes past 4. We've gotten some time extension, but I guess as with every good thing, there is a time to finish. But before we finish, is there any final thing or final last word that any of our distinguished panelists would like to share with the audience?
If I may, just very quickly, if I may, I just wanted to leave one thought with the audience, which is that ESG is a big step forward from the days of CSR. So ESG is not charity. Charity is separate. ESG is separate. The core message in ESG today is that how can you conduct the business of your company in a sustainable manner. So the idea is not to put money aside for CSR. If I was an investor in a company, I would be concerned because that is money getting diverted to something which is important. But if that could be integrated into your own main business, that you are doing your business, make whatever alterations, adjustments you need to make in your business model, in your organization to do that business more sustainably. Don't be a big emitter. And be, on the social issues as well, whether it is customers or community or, gender issues within the, or ethical marketing or, so on and so forth, and of course, even governance standards. Just invest in your company to make sure that whatever it is you do sustainably. And then that is the connection that the markets are trying to establish now, and DLT will help establish between sustainability of a company and its financial performance. So that's one key point I'd like to, that's the only thing we say to the audience. That is it. It's not CSR, it's not charity, it is commercial. So I'll stop. Thank you.
Thank you. Any final words?
Yeah, just a really short.
Okay, Shweta, Andrew, and then Kathy then. Okay.
Okay, so really agree with Kalpana. So just a really short, how do we make all business practice sustainable? So there is really no sustainable business, and where all the practices are sustainable. So it becomes a norm. That's just my key point. Yeah.
Thank you. Andrew?
Yeah, I think building on that, it's that technology can be an enabler to a lot of these new ideas and new paradigms, especially in areas like sustainability, sustainable investments, and ESG. Back to how I started it, it's bringing the instrument plus the data plus the transparency, and using DLT could be a very powerful enabler that helps us to address the problem in a slightly different way with a new set of solutions, unlock some of the prior constraints, and really think about designing a solution that's in the future for the future.
Thank you, Andrew. Kathy?
I guess for me, I just want to reiterate that, we all have a role to play here in sustainability. We have to, I guess, tell more stories instead of just counting stories of other companies. So yeah, I just look forward to more purpose-driven collaborations between us here in the panel and possibly institutions in our audience as well.
Thank you very much. And from a Deutsche Bank perspective, we look forward to our partnership and collaboration as well in this really exciting field. Our apologies to the audience that we are not able to answer all the questions. And thank you very much actually for the question. If I could just invite everybody for a virtual round of applause for our panelists, Kalpana, Andrew, Kathy, and Swesa, and to the STACS team that support us really very well. So on this note, thank you very much to the audience, to everybody, and then let's call this a wrap. Thank you very much.
Thank you.
Thank you. Bye bye.